the government's just kind of locked in a doom loop of, they try to restore soundness in the money. That causes the marginal stuff to blow up. The blowing up causes a lot of pain and trouble, and then the government has to print again. And this all kind of goes to, Max Kaiser's line, you can't taper a Ponzi.
On today's episode of the What the Finance podcast, I have the pleasure of welcoming on Lawrence Lepard, who's founder of Equity Management Associates and a sound money advocate. So, Lawrence, thanks so much for coming on the podcast
Oh,
today.
it's an honor to be with you. Thanks for having me on your show.
Yeah, and I'm really looking forward to having you on because I love listening to all your interviews. So it's great to have you in the flesh to ask questions. I guess my first question, as you said, I said you're a sound money advocate. In your opinion, what is sound money? And I know you have a few favorites, but maybe you can define
Yeah,
it for
sure.
us.
So sound money, in my opinion, is money that can't be controlled by the government, that comes from outside of the government. And of course, before 2008, that was always gold. And, gold was written into the US Constitution. And, we all know, the history of paper money. And as Voltaire said, they all go to zero eventually, which is their intrinsic value. And so sound money is money that is immutable and real and can't be just, printed by pushing a button on a computer. And like I said, gold used to be sound money, and I was a big gold advocate and still am a big gold advocate. I've pivoted in the sense that as Bitcoin came along and became more and more credible, and the bugs got worked out, so to speak. I've become more and more confident that Bitcoin's actually even sounder money than gold, because its stock to flow ratio at the next halving is going to be lower than the stock to flow for gold. So really, sound money is just, I consider it to be honest money. It's money that, a government can't dilute. And, when they print money, they're creating inflation, and that's stealing from everybody who has money. So it's stealing from savers and wage earners. And often they're printing that money to lend it at very low rates to the people who are closest to the printer. And that creates what we all call the Cantillon effect, where those who get that cheap money are able to buy assets before the rest of us, and therefore they benefit and they get fabulously wealthy as a result of their privilege of being close to the printer. So sound money is just, it's gold in analog form, old-fashioned sound money. Not as exciting as Bitcoin, probably not as much upside as Bitcoin, because it's pretty fully distributed. It's been around for 5,000 years, but widely recognizable, and not as volatile as Bitcoin. Big down year in gold is 20%, and those don't occur very often. And then, of course, Bitcoin is emerging digital sound money, and I really believe Bitcoin is digital gold. And the fact that the supply is capped actually makes it deflationary money. I mean, the supply of gold grows at a little under 2% a year. 40 years, there'll be twice as much gold on the planet as there is now. So we all know Bitcoin's capped at 21 million. And so it makes it something very unique. And this, I think a lot of people miss this. It's the SEC has deemed it a commodity. Saylor has called it a commodity. We all believe it's a commodity. I mean, there is no CEO of Bitcoin. There's just a system of 21 million coins. And or there will be 21 million. There aren't today, obviously, 19, growing towards that. But it's the one commodity. If you look at any other commodity in the world and you were to say double or triple its price, well, guess what? You'd get more supply. If the price of oil doubles, we'll drill for oil in places that are marginal. If gold doubles in price, we'll find and explore and pull more gold out of the ground. Wheat, same story. Anything, any commodity really. Push the price up, you get more of it. Well, here's a commodity, Bitcoin, which has a fixed supply, and it doesn't matter if the price is $1 million a coin. There's never going to be more than 21 million of them. And so that's a very, very unique characteristic that I think everyone in the world is kind of coming to grips with and trying to decide how they address that. And the other thing I would say that I think is related to that is that, compared to all the other cryptos, which are, have CEOs and, funky monetary policies, this policy got embedded in code. It would take a majority of the users to change that code. That's not going to happen, in my opinion, and I think it's very unlikely to happen in most people's opinion. And as a result of that, you've got ultimate digital scarcity. It's truly a technical invention that didn't exist. So you have to think of this thing, in my opinion, as like a printing press or like an internet or like an automobile, or it's really it's a technological breakthrough. Prior to this, anything that was digital could be copied, and this could be copied too. I mean, somebody could do a competing Bitcoin. The thing is, we're so far ahead now, the network effect is going to carry us. It'd be like saying, I was arguing with somebody on Twitter this morning, well, why isn't there another internet based on something other than TCP/IP? Well, because TCP/IP is so good and it works so well, and everyone's on the internet. To try and get everyone to change to something else would make no sense. And I think that's what's happened with Bitcoin. It's now far enough down the road that there's not even anybody in second place, and it's very unlikely to be supplanted. Just as probably Google is unlikely to be supplanted as the leading search engine. So, and that's the network effect. So it's a really, really unique technical innovation that we are all coming to grips with. And I think if people aren't taking the time to try and learn about it and understand it now, they're gonna regret that in 10 years. Because if you kind of extrapolate out these network effects, I got involved in the internet very early in the early 90s and bought some internet companies, private internet companies, and I couldn't see where it was going, but I mean, I sensed it was growing. It was going to be important. I didn't know how important. And of course, even I've been pleasantly shocked by how important the internet has become. And I think it's a similar kind of thing. I think Bitcoin is going to become extremely important in the world on a going forward basis. And we're still really in the early adoption stage. I mean, it's unlikely that more than 10% of the world, is aware of and owns any Bitcoin, probably less. So
Yeah. So I guess my question is, how can our current economy move to one of these sort of currencies that is, as you said, immutable? It's sort of got a fixed amount of supply, because I guess the challenge is that you need money flowing throughout the system. You need this velocity of money going between people. If there's
right.
not as much of an incentive to, I guess, sell your Bitcoin or sell your gold because you think it's going to appreciate, that could create these sort of deflationary periods where there's not enough capital. And I guess you could
Well,
almost
yes and
say,
no.
so
I mean,
yeah.
there'll be a natural low-level deflation, which really kind of occurred. I mean, if you look at the last time we were on sound money in a meaningful way, in my opinion, it was the United States from 1789 to 1913, before the creation of the Federal Reserve. And there were periods in there where actually we went off sound money, like in the Civil War, they issued greenbacks, which diluted, the underlying dollar and so forth. But in general, during that period of time, dollars, which was kind of the unit of account in America, were exchangeable for gold, and there was only so much gold in the world, and so that provided a natural break on how much money could be printed. And people, the Keynesian view is that if you don't have money supply growth, you can't get real growth, and that's just bullshit. I mean, it's a flawed notion that you have to grow the money supply to have economic growth. What Keynes called animal spirits. I mean, look, people are going to always buy what they need. People want to eat. People want to have houses. People want to drive cars. They're not going to necessarily buy things they don't need. And I think the world would be less consumption oriented on a sound money standard. But I can make a pretty strong argument that would, for the world in general, that would be a good thing. If people spent less time worrying about consuming and more time just consuming exactly what they needed. The other thing about a deflationary monetary standard is you can save, and over longer periods of time, you can have some confidence that what you have saved will hold its value and its purchasing power. And that's it's called long time preference. And that's a really great thing because it allows people to have leisure time. It allows people to retire. It allows people to get off the treadmill of feeling like you always have to make more money because the money you've got is going down in value. And as a practical matter today, it's very hard for anybody to retire because depending upon how long they're going to live, they don't know if they're going to have enough money. If the inflation is very high, the money they've saved may not buy them what they need in their retirement. So, and to me, that's not right. So, if you look at, you might say, well, okay, the last time we were on sound money, there was no inflation, but okay, that's true. The inflation was quite low during that 1789 to 1913 period. Having said that, living standards improved enormously during that time frame. I mean, we went from being, because of technological innovations and other things, but we went from being a nation of farmers to being a full-fledged leading industrial country. And so you don't need monetary growth to have economic growth, because what really matters is what we call real growth. I mean, if your economy, if your revenues in your economy, your GDP is getting bigger at 3% a year, but you're diluting the money, you're growing your M3 at 3% a year, you're not really having any real growth. The numbers just get bigger. And so, real growth is what's how many more goods and services get produced, in real terms, as opposed to in nominal terms.
Yeah, it makes sense. And then I guess from your perspective, how long does this current fiat system have? Or
that's the $64,000 question. I wish we all knew the answer to that. Yeah, it's a great question, and I've tried to put some borders around it. And I'll give you my best guesstimates, and that's really all they are. And I'll caveat this by saying that I thought it was all over in 2008. Okay, so that gives you so don't trust me, right? 2000, it's been a long time since 15 years since 2008. So it feels to me like this is a fourth turning, which is a model that Howe and Strauss, a book they wrote about how every 80 years, kind of the basis of society gets overturned and new rules get put in place. And it feels to me like we're going through that with this monetary system, with all the debt growth and the money printing and so forth. And so if you look at prior fourth turnings, which would include kind of the Depression and World War II, or the Civil War, or the American Revolution, or they document it all the way back to the 1400s, but they tend to last about 20 years. And so let's assume you kind of started this one in 2008. In 20 years would take us to 2028. Some last as long as 30 years. So maybe we could go to 2038. I mean, that's a big wide range, but I would think that somewhere between 2028 and 2038, and probably on the shorter side, probably in the 2031 or 2 area, we've transitioned back to a sound money standard, because the current monetary standard has fallen apart and failed. We're seeing all the signs of that. The most recent one being the collapse of Silicon Valley Bank and First Republic and the bailouts. I mean, the government's just kind of locked in a doom loop of, they try to restore soundness in the money. That causes the marginal stuff to blow up. The blowing up causes a lot of pain and trouble, and then the government has to print again. And this all kind of goes to Max Kaiser's line, you can't taper a Ponzi. The system as it's currently constructed needs an ever-growing supply of money and or credit, and credit really becomes money. When you borrow, you get money for what you borrow, in order to go forward. And the problem is, as my Twitter account shows, I've got a chart, my pinned chart at the top of my Twitter account shows a red line, which is the total all sector debt, and a blue line, which is GDP. And we've gotten to the point at which all sector debt is growing so rapidly compared to GDP that we don't have enough GDP to service it. And in my opinion, we hit we hit peak debt growth at the end of 2021. And they're now trying to stop it. And that's why Bitcoin's down and gold is a little soft. But they can't. I mean, they can for a while, but as they do, things break. Silicon Valley broke. Before that, the British pension funds broke. Before that, we had a repo blowout in 2019 that caused them to, stop tightening. Before that, we had the taper tantrum in 2018. Before that, well, somewhere in there we had COVID too, which was the big one. But and before that, we had Latin American crisis. I mean, you name it. So the point is that they need to continue to print money, and that printing of money dilutes the value of every piece of money out there. And so investors and people who are operating in this world, in my opinion, need to choose sound money alternatives. And sound money alternatives, easily defined, as just anything the central bank can't print. So real estate qualifies. Problem with real estate is you can't move it, and they tax it. The nicer things about gold and Bitcoin is it's Bitcoin's extremely easy to move. Gold's a little tougher; it's heavy, and they can tax it, but they got to find you to tax it. And in Bitcoin's case, it's not so easy necessarily to find you. So I don't know. Does that answer your question? I mean, that's kind of my general view on that.
Yeah, it does. You've 10-year period, but as you said, these things are so hard, and I guess
Yeah, I
the
mean, look,
current.
I mean, the other thing I should say is, I mean, it could happen tomorrow. Do you know what I mean? I mean, it really could. I mean, Balaji is a guy who has given a lot of podcasts. He had a great podcast with Marty Bent recently. It's very long, but and he drew some fabulous comparisons to the waning days of Soviet Russia, and before it really kind of just collapsed on itself. And the lies that were being told, the fake economic statistics, the fake politics, the internal dissension. I mean, all of the things that you see today in the West, I mean, the extreme politics, etc. So, um, you know, I don't trust any of the numbers coming out of any of the government bodies these days. Two, I don't trust the stock market. Three, I think it's almost insanity to trade or to try to, make economic predictions based on all these fake numbers and this kind of quote unquote fake economy. And my view is that really the only defense that investors can look for is to be in assets that they absolutely are sure will not be debased in the enormous debasement that must come if they want to keep the system running. Now, I say that if they want to keep the system running, because there's a chance, slim, I think, but possible, that they'll actually take the default, let it all collapse route, rather than printing. But even in an all collapses route, lots of entities go bankrupt and bonds aren't worth much and stocks aren't worth much. And, even, I mean, as an example, during the Great Depression in the United States, gold did extremely well. So, because Bitcoin and gold don't have counterparty risk and they can't go bankrupt, they're just assets. I think that they would, on a relative basis, perform well, even in a collapse of the economy. Now, Bitcoin might still be $30,000, but if the general price level, I mean, in the United States, the general in the 30s in the Depression, the general price level went down in some things by like 90%. Real estate prices fell by 80 or 90%. So your gold was locked in at $35 an ounce at the time, but that $35 bought a lot more real estate when the price of real estate fell 90%. So on a relative basis, it was a very good investment. And gold stocks during the 30s did extremely well. I mean, the big gold index was up 10x, 10 times your money from 1930 to 1940. So, and of course, Bitcoin didn't exist back then, so we don't know, we can't draw a comparable. But I think Bitcoin, the way to look at it is just it's digital gold. That's kind of how I see it.
Yeah, it makes sense. I do find it hard to imagine them defaulting. I think they're going to fight tooth and nail to keep the system going for as long as possible until, as you said,
It's
too many
certainly
people
what
move
they've
away.
done. Yeah, it's certainly what they've done, and their choices are kind of complete economic collapse and pitchforks, and they all get thrown out of office, and it's almost perhaps even kind of Mad Max like, or they have inflation, and everyone's bitching about the inflation, but at least the system keeps running, and all they got are a lot of people bitching, and then eventually, in my opinion, the bitching will get large enough that politicians will emerge who will say, okay, look, we've got a real money problem here. We need to do a reset. We need to do a reset. Really, we need to return the country to a sound money standard. Um, and because otherwise the inflation is just going to eat us alive. I don't know. It's possible they won't be smart enough to even see that, and we'll just go to hyperinflation. Of course, after which then everyone will see what happens with money printing, and then most certainly maybe they'll try a couple of fake currencies, but no one will buy it. The only true solution in that instance will be to go back to a sound money standard. And I could see that happening. So, I mean, one thing I will say is that having studied a lot of hyperinflations around the world, they're terrible because in the sense, often they're terrible because sometimes they lead to war, but they're also terrible because people get wiped out. But if you don't blow up the buildings or kill people, all the assets are still there. They're just in different hands, right? The people had them, in currencies, they lost all their money. And, things get restarted and work reasonably well pretty quickly when you return to sound money. I mean, to me, the problem that the world faces today is that we are not on a sound money standard. And I think if you look through a lot of problems in our society today, I think a lot of problems, it's not obvious at first that that's what they grow out of, but I think having seen, I mean, I was a kid in the 70s, and it's not like we were on a sound money standard then either, but we kind of had the remnants of one because we didn't break the gold standard until 71 when Nixon went off it. And, things worked reasonably well. And it was a reasonably fair society. And we had our problems. I mean, the Vietnam War was a disaster, but which is actually what drove them to go off the gold standard. But anyway, yeah, so that's kind of how I feel about that.
Yeah. So do you see like a Bretton Wood 3.0 or like I guess a
Could be,
BRICS currency
I
coming
mean,
in?
it could be. I mean, if the politicians are enlightened enough, yes. And I'm not sure. I don't think the bunch that we have in there today, I don't think they're going to do it unless push comes to shove. I mean, my sense is what will happen, what's more likely to happen is we have runaway inflation, very, very high inflation, perhaps even hyperinflation. And then a new crop of politicians emerges and says, hey, look, the money is broken. That's the problem. Vote for me and I'll fix the money. And yeah, then they would do a Bretton Woods. I mean, they would create a new American dollar, maybe 10 old American dollars equals one new one, and that new one is convertible into a fixed ratio of gold or a fixed ratio of Bitcoin or a fixed ratio of a commodity basket, including gold and oil and Bitcoin and a few other commodities. I mean, the money needs to be tied, though, to something with a supply that can't just grow forever, because what we've seen with this crop of politicians, really, and every politician, all politicians throughout history have shown us that once you give them the monetary lever, they're going to use it. They're going to use it to buy votes. They're going to use it to feather their own nest. They're going to use it to try and get ahead in the world. If they have control of the monetary system, they can make outcomes that benefit them take place. And that's the problem. That's the underlying problem, that they're not working on all of our behalves. They're working on their own behalves. I mean, and we, in the United States, I'm not sure where all of your audience is, but in the United States, it's just terribly obvious how broken it is, because you have people like Elizabeth Warren who get into the Senate, and she's got a $60 million net worth. I mean, what has she ever done? She's only made she makes $280,000 a year as a senator. And she's got, I mean, she's okay, she's written some books, she's given some speeches, but really 60 million? I mean, how's that not corruption, in some way, shape, or form? I mean, Treasury Secretary Janet Yellen, got paid $7 million to make speeches to the banks that she was supposedly regulating. I mean, I'm sure that those banks who paid her $250,000 to come and make a speech didn't really view her words as being worth $250,000, but they sure as hell thought, hey, we better do this, because if we don't, she could look unfavorably on some of the stuff we're doing, and we don't want her to do that. So it's a soft bribe. There's a lot of that, right? It's a broken system.
Yeah, I agree. There's definitely wrong incentives in politics at the moment, especially in the US. I think that's probably the worst place at the moment in that regards, or one of them. If you look at sort of countries that I guess have had these difficulties, Argentina, Lebanon, especially recently, they've sort of done whatever they can to prevent the local population from owning these sound currencies. You could say, confiscating gold, making limiting what you can convert US dollars legally to.
Absolutely. Yeah, no, in Argentina, there's an official rate and a black market rate for conversion. Yeah. No, look, I mean, governments benefit greatly by having fiat currencies. We all know that. And they try like hell to block the exits. They don't want you leaving. They want you in their currency, buying their bonds, playing their game. They want to be able to rob from you. And I mean, we've seen this recently. Maybe this is where you're going with this. We've seen this recently with this Operation Choke Point, right? I mean, Elizabeth Warren, who I mentioned earlier, she, said that she was going to create an anti-crypto army. And then she worked with the administration, the Biden administration, to come out and do everything they could to kill, banks and others that were doing business with people in the general crypto industry and in Bitcoin as well. And they wanted to make it hard. I mean, and as Barney Frank says, they assassinated Signature Bank, which was one of the banks that was a leading bank in doing business with crypto companies. And You know, they did a lot of things. They've done a lot of things to try to slow down the adoption of Bitcoin and alternative currencies, because, you know, as much as some of them play dumb and say, oh, it's a worthless thing, and da, 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 I think most of them, not most of them, but many of them understand what a threat it is, and, you know, what an existential threat it is. And so, you know, they tend to, you know, they tend to try and throw sand in our eyes and mess us up. And, you know, I think they've got more moves in their, you know, in their quiver. I mean, more arrows. They can, you know, I think at some point they could tax us more heavily. In the United States, you already have to tick off a box on your tax return. The question is, have you dealt in or traded cryptocurrencies in this calendar year? Yes or no? You know, okay, yes. All right, well, now they know you have some crypto. They don't know you have Bitcoin per se, but they know who you are. And it's not far of a leap from there for them to say, well, we're worried about people cheating on their taxes, so we want you to tell us, you know, what crypto you've got, where it is, you know, what it's worth, etc. And you need to do that because it's state policy. And by the way, you know, it's anti-American to not do that. You know, I mean, they, you know, recall that in World War II, when they were running out of money to fund the war, you know, they wanted everybody to put their savings into war bonds. And of course, Americans were very patriotic and wanted to defeat the Axis, and so many people did. Sadly, those war bonds didn't work out very well as an investment because their interest rates were low, and post-World War II, the inflation was enormous for a couple of years in order to get out from the debt burden that had been on top of us as a result of fighting in Toronto. So it's interesting times, very interesting times.
Yeah, definitely. So I guess if we look at like during this period, what are the assets that you're looking to hold to potentially protect your wealth from this hyperinflation? I'm sure it's, you know, there's Bitcoin, there's gold, but what else would you
Yeah, I've told people, just so people know, my personal allocation is about half Bitcoin, half gold. That's because I'm 66 and I don't want to have everything in an asset that can go down 70% in a year. You know, and other than that, I would recommend real estate. You know, cash is never bad for flexibility. And hey, today you can get paid 5% risk free on, you know, on your cash. It's a nominal yield, not a real yield. I mean, it's still losing money against inflation, but you are getting paid something currently. Yeah. So I mean, you know, the list, I mean, artwork, you know, the list of assets that can't be printed is, you know, and that are easily transferable too. It's not that long, you know. It's just not.
Yeah, it makes sense. So, Lawrence, thanks again for your time today. I really appreciate it. My last question is, what is one message you'd like people to take away from our conversation?
Oh, sure. Yeah, absolutely. So I'm pretty active on Twitter and I have my DMs open there. So you're welcome to question me or add stuff there. The Twitter account is at Lawrence Lepard, Lepard, just my name. I also have a website. The name of the firm I'm running is called Equity Management Associates. So my website is EMA2.com. There you can sign up for my free newsletter. I won't spam you. And every quarter we write a quarterly report on macroeconomics and what we see happening and so forth. And there are a lot of white papers on there about Bitcoin and other subjects. So we just try and make it a free source for investment research. Yeah, so that's the best way to reach out. You know, the fund is open to new investors. You have to be accredited. The SEC puts all kinds of restrictions over here on. We can't take small accounts, sadly. But if you're credited, we do have people in our fund that are always joining. I mean, I think as time passes here, a larger and larger percentage of the world is coming to understand the risks associated with fiat currency because they're seeing inflation that's just really bad. And that's usually the first eye opener, like, oh, what's this all about? You know, and it's scary because you say, well, I'm living on a fixed income or I'm XYZ age, I've got my savings. And you think to yourself, well, what happens if the price of gasoline does go to $10 or $15? I mean, can I afford to drive? You know, what happens to my I mean, you're in the UK, you know, what happens to your electrical bill? What happens to your heating bill? You know, I mean, it's what happens to your food bill? I mean, inflation is a silent, deadly killer of people who've saved money and in economies. And And sadly, it's getting worse. I mean, and I don't think it will get better until we really do a major league reset. But I do think, to our earlier comments, that's coming, and maybe even as soon as the next 3, 4, 5 years. But I want to be conservative and give myself a little time. I think within a 10-year window it'll be all over. That puts us at 3033. So, but I also think this period is going to look like the 70s. In the 70s, the stock market went sideways, big ups, big downs. The bond market did terribly, and the two best categories to invest in were oil and gold. And of course, you didn't have Bitcoin, so you can't measure it by comparison. But I think people who've invested in sound assets, oil, gold, Bitcoin, in the next 10-year cycle, they're gonna feel like the people who invested in the FANGs 10 years ago. The way the FANGs were really dominated, the kind of the growth and expansion of the internet. I think we're going to see that same phenomena in these sound money assets.
Yeah, makes sense. And I guess a question, sorry, that one more that we haven't
Yeah.
mentioned yet is the BlackRock ETF, which that
Oh
will
yeah,
apply for the Bitcoin. What are your thoughts on that? And I guess, do
that's
you think they're going to get it? And a lot of people have said it's negative, but it potentially would be
yeah.
positive.
So this is like most things in life. There's good things and bad things, right? I mean, so first of all, to the answer to the question of do I think they're going to get it? Oh hell yeah, they're going to get it. I mean, they're so well connected, and the government's so crooked, and I mean, yeah, if they want it, they'll get it. I mean, unlike GBTC, which they've dragged their feet on. And look, the only way that you can conceive it at a big picture level is to say to yourself, hey, this is one of the 2 or 3 biggest money managers in the United States that 3 years ago was poo-pooing Bitcoin. Larry Fink was saying it was a money laundering tool, and now they're opening up an ETF in the category. So that's a wake-up call to every other money manager. Like, holy shit, one of the leaders is looking at going into this. Maybe we got to pay attention. That's the good news. And so I think it'll spread to other boardrooms and money management firms, and it'd be kind of like, there's going to come a day, 3 or 4 years ago, if you were a professional money manager, you want to put money into Bitcoin, everyone's like, what are you, nuts? I mean, you can't do that. That's great. And it's going to get to the point where it's like, oh yeah, having a little, yeah, I could see that. It makes some sense. I mean, you just kind of see that view changing. That's all the good news, right? So it could help drive adoption. It could help push the price higher. What's the bad news? The bad news is that it's possible, and maybe even likely, that they will run some kind of a paper Bitcoin scheme. They're very much similar to the way that I think GLD, which is one of the largest, if not the largest, gold ETF, has been used at various points in time to manipulate the price of gold. And so what do I mean by a paper scheme? It's simple. Somebody goes to BlackRock, the ETF, and says, I want to buy a share, and BlackRock issues a new share and takes their cash. And then BlackRock doesn't turn around and actually buy any Bitcoin off the chain. They just take the cash and credit 1 Bitcoin onto the account. And so then if the price of Bitcoin goes up, BlackRock owes you that price appreciation. But your incremental dollar invested hasn't hit the price, because what they've generated to you is a paper claim. And one might say, is that illegal? And the answer is yes, it is. But that hasn't stopped these guys in the past from doing stuff like that, in my opinion. So, the fact that they might be there to mess with it, that's obviously a negative, right? I mean, people say, well, Bitcoin's better than gold. You got a blockchain, you can see it, you can audit it. We know how much of it there is. All those things are true. But still, if there's a futures market for Bitcoin, where people can buy and sell paper Bitcoin, not the real thing, that's siphoning off demand for the real thing. And that's, I mean, there's in the gold space, it's been insane how much of that's taken place. And that's why the price of gold is as low as it is. It's been suppressed. In the Bitcoin space, I don't think they've gotten nearly as good, or they haven't had as much time to develop the suppression tools. But it's very clear to me that somebody's probably working on that. So and therefore it is somewhat of a risk. I think it's a risk we can all take and manage, because I think that we will overwhelm them eventually. I mean, if the entire world wants Bitcoin, they don't want to be short it, right? So we'll see. We'll see how it unfolds. But I am watching that with interest, that hearing. Yeah.
Crazy to think. So thanks again for
Yeah.
your time. You mentioned all the links. I'll put them in the description below. But yeah, I really appreciate you coming on.
Oh, thank you very much. Really enjoyed being with you. Take care.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.